China stepping up its efforts to curb potential contagion with a $1.5 billion stake sale in Evergrande bank holdings. Let's bring in Bloomberg's Tom McKenzie for more. Tom, let's start there, sir. The latest in their effort to really settle things down.
Yeah, John, the blurred contours of the policy response slowly, painfully coming into more focus now. What we know from the last 24 hours is that the government of China are prepared to intervene to shore up the banking system. It's small, it's 1.5 billion, and it's a local government, but nonetheless they are buying a substantial stake from Evergrande in a local bank that had become under distress. That 1.5 billion, by the way, will be used to deal with liabilities, not pay off bondholders. What else is clear is that the priority for policymakers is ensuring, and they've seen this in terms of checking the bank accounts of Evergrande, that the money goes to the building out of these properties for which 1.6 million people have put down deposits and paying suppliers. What is also clear over the last 24 to 48 hours is that bondholders, dollar bondholders, are indeed lower down in terms of the hierarchy. We can look back to last week, that $83 million bond payment that was not made according to our sources. We are now in that 30-day period. Today was meant to be another payment, $45 million. According to two sources telling Bloomberg, those payments have not been made. The other part of this mix, the PBOC coming in with some support. 9 straight days now of liquidity, the calming balm of the central bank as the pressures continue around Evergrande.
No real signs of panic here, though, Tom. From your perspective, you've lived there. You know how this works. I don't see panic right now on the official side of things.
I think that's right. There isn't panic yet. What we've yet to hear is any clear communication from the government itself. They haven't come out and made any statements. We don't have any big front-page editorials in the state media. What you have is very targeted intervention to ensure that there is financial stability and that this doesn't spread. You're looking at the Chinese people and whether or not they're going to start pulling back on house purchases when the real estate sector accounts for at least 20% of GDP. But you are seeing concern again. It's reflected in other developers, the likes of Sunak and also the appropriately named Contagion, both under pressure today because people are concerned about whether they will be able to pay off their liabilities as well. A note for your diary, October the 11th, Evergrande has to make 3 additional dollar payments. We'll see if that happens.
I can't wait, Tom. I imagine, given what's happened over the last week, that they may not be, but the emphasis on may not. Tom, going forward from here, there is a view from investors that this country, this government, the Chinese Communist Party, is more willing to accept a lower level of growth. Does that resonate with you, Tom?
It does, John, because this is self-inflicted. You cast your mind back to last year, the 3 red lines that the Chinese government put in place around the property sector. This is what curbed the lending to some of these very over-leveraged developers. Longer term, of course, economists and China watchers, many of them will say that longer term, this is about rationalising a property sector that's been overly dependent on cheap and easy credit to ensure that the balance of growth becomes healthier in China. But the longer term, or the short-term picture is that the economy is going to feel the pinch of this. Not just this, of course, but the crackdown on technology, the crackdown on those education sector, and, of course, the energy squeeze as well in the industrial sectors of China, the northeast under pressure as well as a result of those high energy prices.